Welcome back. Hope you're having a good Monday morning. Remember, it's a 5-day week and we're going to kickstart the week with the Nifty actually opening a little bit lower because adjusted. You compare the SGX Nifty with the Nifty futures and that's suggesting a little deeper gash now, 110-point downtick. But we've got plenty of stocks to discuss and we'll discuss Infosys in just a bit. But for the time being, let's welcome Prakash Diwan, who joins us on the show. Hi, Prakash. We'll discuss Infosys a little later, but I wanted to ask you about HDFC Bank. How do you read those numbers and your view on the stock from here on?
Good morning, Nigel. So I think HDFC Bank numbers very clearly tell you what the bank has been kind of building towards as the potential, merged entity. The foundation of that, the building blocks have been put into place. I think all metrics are good, particularly the retail growth that they've been able to clock. And you can imagine when cost of funds starts getting to be impacted favorably, this entire franchise that they've built. And remember, remarkably, they've been probably the only private sector bank that's been expanding a branch network in these times. And they've used technology to the hilt in terms of making branches very effective, very, fully, efficiently utilized. And that's what's kind of started to reflect in the numbers. I'm extremely positive on this. When you compare it with an ICICI Bank, which was growing so rapidly till, let's say, about late last year, or even Axis Bank, which has its own triggers, I think this bank stands out again from a value perspective and from a momentum perspective. Also, very rarely you see that in a large entity like HDFC, but that's what's going to happen. So extremely positive. People who don't have it in the portfolio yet, surprisingly, there are people who still don't own it. They'll probably start looking at it at least to start adding into the portfolio at this point in time. We'll get too late otherwise in terms of the realizations when the merged entity starts kind of playing out.
All right, got that. IT is definitely going to be in focus as well. So, Prakash, just stay on for a bit. We need to discuss Infosys numbers too. This is the first constant currency revenue decline that Infosys has seen in the last 10 quarters. So, definitely very weak numbers. Sumit Jain, the IT analyst at ICICI Securities, joins in. Sumit, I was going through your note where you say that Infosys has a relatively high exposure to the digital transformation agenda of clients, and now that is clearly seeing a delay in decision making. What does this mean for the earnings going forward? Have you scaled down your EPS estimates, your earnings estimates as well? And what does one do with the stock now?
Yeah, no. So basically, we have cut down our earnings estimates by around 6 to 7%, mostly for the outer years. And I think the primary reason for that has been the margin decline what Infosys has seen. And, we believe that this margin decline is basically coming from the, the mega deals what they have won, and they are not able to recoup the margins back in these kind of deals. So clearly, there is a pressure on the company in terms of recouping the margin back. However, having said that, we have not toned down our constant currency revenue growth forecast for the outer years, which we are still maintaining in double-digit growth. So I guess the near term, there is a bit of a pain, but one quarter doesn't make a trend. And this is where we believe, you have to give a benefit of doubt to the company, given that they have a very high digital transformation exposure. And that transformation agenda took a backseat for the March quarter, where, there were a couple of weeks of impact, particularly after the banking crisis even played out. But yeah, having said that, I guess it is still yet to be seen that the senior management departure at Infosys is having any impact on the delivery performance. Because I guess company also mentioned that for the full quarter, they had certain impact on the ramp down of certain projects. So I guess coming June quarter, if that kind of things aren't to be seen, then definitely one can have a view that company is on track. Yeah.
All right. Hi, Sumit. Good morning. Sumit, going by what you're saying, and given the fact that the ADR overnight was down sharply, this morning, Infosys, adjusted, will be down 35-38% from the recent peak, just a year or so ago. For someone who's looking to buy, to build a good portfolio, do you think the stock becomes a buy around these levels, post, say, an 8 to 10% gap down?
So definitely, I think we believe that the stock will be trading at around 19 times 1 year forward multiple. And that will be closer to their last 14-year average PE multiple, 1 year forward PE multiple. And in the last 14 years, other than GFC and the COVID crisis period, there were only a couple of years where Infosys has actually traded at these multiples because of the slower growth environment. So I guess clearly we believe this is, if people are looking for value stocks, then definitely after today's correction, it will give a very good opportunity to buy. Having said that, over next 1.5 months, there could be a bit of a consolidation in terms of a slight derating of Infy over TCS, given that TCS had a better earning growth in this quarter. But this is where I think the June quarter commentary from the companies 2.5 months down the line will be very, very important. But yes, from a 1 year perspective, we would definitely like to recommend investors to add into today's correction.
Okay, Sumit, stay with us. Moshe is also joining in, but I want to just quickly for our viewers play out the commentary from Salil Parekh, CEO of Infosys. My colleague Ritu Singh spoke with him. Listen in.
For the quarter Q4, what we saw is during the quarter, there were some clients where we saw ramp downs, and then there were some areas where we saw one-time situations. The bulk of the impact in the quarter was from the ramp downs that we saw during the quarter. There are two aspects to it. So one, on the ramp downs, there have been with some clients in the telco sector, in the high-tech sector, in retail, and in financial services, in mortgages, asset management, and investment banking. So those ramp downs, we saw some stabilization in March, but the demand environment is uncertain. The way we've constructed the guidance is based on what is the large deal and overall wins we've had in the year and also in the quarter. And then a lot of our work, which is multi-year work, that carries through. So based on that, we've also expanded, instead of a 2-point guidance, which we normally give, we've done a 3-point guidance, more with a view that the environment is uncertain given what we saw in Q4. There, as we've said in the past with large deals, the timing is not like a predictable thing when they come in a year or it's going to come every quarter or something. But over 1 or 2 or 3 year periods, you see this thing shows more stability. There is slowing in decision making for large deals. So the time, let's say discussion or deal is in a pipeline becomes a little bit longer. Has been, we've seen the data. But when the decision is made, it starts right away, and that translates.
Okay, I mean, there is, with IT company earnings, I remember 15 years ago, there used to be this constant thing about body language. Body language of IT companies and this, So body language is a real thing. Salil's body language was muted, right?
Yeah, on the back foot.
He's out there getting it done kind of a guy, and it did show. I mean, the numbers speak for themselves, and he's done a fantastic job, absolutely no doubt, since he took over. And I think this is the first quarter where there is a bit of a hiccup. Moshe Khatri is joining us, Managing Director at Wedbush Securities. Moshe, good to have you with us here. Thank you very much. What did you make of the Infy numbers and your own assessment? Is it, so Sumit was saying that we'll get a big correction. We will. And then after that, maybe it gets into a buyable kind of zone. What's your own assessment?
I think we're in a very unusual situation. On one hand, the budgets are here. On one hand, you've seen at least TCS come out with very strong bookings for the quarter. On the flip side of it, we knew kind of early March that the situation is going to be fluid in terms of decision making and pipeline conversion. What's interesting is that the speed at which projects were deferred, kind of shows you that things can get turned on pretty quickly as well. And that's why it's kind of an unusual situation. And it almost is a call on the global macroeconomy. We've had, the four large banks reporting in the US on Friday. Numbers actually look very healthy. So, you almost have to make a call on, clients, psychology in terms of their propensity to spend more than anything else. It's not a very similar situation to the 07-08 timeframe, for example, where banks had structural issues because we're not here yet. And that's what makes it really tough to kind of take a look at some of these names. We took numbers down early March, probably not enough. And I would say that the earnings misses for both TCS and Infi were predominantly a function of utilization rates. People sitting on the bench towards the end of the quarter. And this could be adjusted pretty quickly if these companies want to, in order to preserve margins. So I think we're kind of and as I said, it's a very fluid situation, and it seems that this is going to be more of a back-end loaded year than anything else.
Okay, it's a fluid situation. Moshe, hi, good morning. What also stood out for us is that while TCS said that there are project, deferrals, they've not seen any cancellations just yet. But Infosys coming out and saying that there are ramp downs, there are cancellations in certain cases as well, just brings us to the question that in the near to medium term, is there a case being built for TCS to perhaps outperform Infosys just based on the commentary and the numbers that they posted this quarter?
It's a possibility. I think a lot of this is going to be a function of the intra-quarterly updates from these companies. If things stabilize, or are we going to see some more releases of funding for projects? Based on that, they'll kind of determine, based on the feedback, we'll kind of determine where both of these companies go. But remember, the spending environment is going to be, relevant for everybody. I don't think anybody's fully shielded here. And that's why I kind of call this a fluid situation.
All right. Thanks so much, Moshe, as well as Sumit, for joining in and giving us view on the tech space, in particular, Infosys, as well as TCS. We look forward to chatting up with you rather soon. But let's get back to a conversation that we're having with Prakash Diwan. Prakash, since we're talking about TCS and Infosys, one positive is both of them are saying that attrition will cool off from here. How does that place Info Edge? Because if attrition is going to cool off, it may not be very good news for them, right? Any view on that stock?
I think more than just attrition cooling off, generally the slowdown in hiring is so largely evident. And I don't see Info Edge gaining from that. In fact, the only thing that could revive them is of course, there's a very small residual stake in Zomato, but if things look up there, that's probably going to be a bigger spark than the core hiring activity. But my sense is IT will probably reset itself in another 6 months, Nigel, in terms of what kind of projects, what kind of businesses start doing well. The mid-sized players could probably start being more promising, and that's more domestic oriented. So you never know. But at this point, Info Edge does lose its luster of sorts, given what's happening to the large IT majors.
All right. Let's do one thing. Let's take a quick break on that note. We have a lot more to talk about. But on the other side, we'd also tell you how to focus on the market, given that we have weak Infosys numbers, weak global cues. Do we get start on the back foot? And what do we do from there? Mitesh Thakkar, Sudarshan Sukhani will be joining in for some technical trades. Stay tuned.